All right, so for more on what's moving the broader stock market, I want to bring in Ed Siddell, CEO and Chief Investment Officer at EGSI. Ed, welcome.
Thanks for having me back.
A little bit of volatility that we've seen in the stock market to start Q2. What does that mean for investors?
Well, you know what? It's not surprising, actually expected for us. We knew that there was going to be some profit taking, especially after the quarter that we had this year. We remain cautious, and we think that what we're seeing right now is going to create some opportunities, especially later on the summer.
Where would those opportunities lie?
We're starting to see the markets broaden a little bit. Not just here in the U.S. but globally. Manufacturing, I'm really starting to like. We're starting to see small caps, gain some steam ahead, and I think a lot of it has to do with, even though we're seeing rates increase, just based on Powell's speech, him adjusting the inflation target from 2%, to above 3%, and still saying that he's going to lower rates a couple times. I'm not sure how he's going to do it, but as soon as that happens, I think the market is really going to take off. I don't think we're going to start seeing those rates lowered until the end of summer now, if at all. But that's going to create some really good opportunities going forward, especially if we're looking at those companies that have a lot of cash on their balance sheets, and have strong revenues.
Okay, so by and large, Ed, my takeaway here is that this is a positive for the broader stock market. But we know these high interest rates have kind of shaken out some losers in the market, if you want to say that, right? Companies
Absolutely.
Heavily indebted, certainly amid these high interest rates. We've seen several mid-sized banks fail in the past 16 months or so. For companies that don't have strong balance sheets, what does this mean for them?
You know what? They're in debt. I mean, the debt is a huge issue. I'm not a big fan of bonds overall, especially right now, because of the amount of corporate debt. And I think the amount of leverage that these companies have, and as credit continues to tighten, it's going to be tough. But as we see profit taking, and those companies that do have the stronger balance sheets, buying in the dip, this may make some sense for those individuals that are positioned properly.
hmm So in terms of the cycle, right, we
Mhm.
know that clearly rates are high. Some would say we might be toward the end of the economic cycle, and oftentimes at the end of an economic cycle, you will see a recession. Is a recession something that you think the U.S. can avoid?
Well, you know what? If we go back to what Powell said during an interview in 2022, he said that if the short-term interest rates, if we have an inverted yield curve for longer than 18 months, we're in a recession. So, I mean, think about that. Even though he says we're not in a recession, go back to what he said a couple weeks ago, where he increased the target of inflation from 2% to above 3. And he's still talking about lowering rates. So what that's telling me is he sees a recession looming, and he wants to make sure that we don't have a hard landing, and put the economy in a tailspin, because I think he's really looking at his legacy. And so that, because we're in an election year right now, I think we have a very narrow window of opportunity between now and the election, to take advantage of some opportunities. But I think it's going to be really, really tough, and you really have to do your homework.
Interesting. So with that in mind, Ed, anyone who has a 1 year, 2 year time frame, maybe the stock market can melt up through the election, but do you anticipate, if a recession is on the horizon, that we
I
would
do.
see the stock market pull back as it traditionally does during recessionary times?
I do. I think that we've been hovering around a recession for a long time now. When you look out the window, it doesn't seem like it, because people are still spending money. But the disparity between Main Street and Wall Street just continues to get bigger and bigger. So, those just every day going to the grocery store, whether it's Walmart, Costco, Kroger's, whatever that the grocery store is, we see it every day. And these are telltale signs of what's to come. And if rates continue to go up, yeah, it's going to be really tough, and then the market's going to react. I think the last tool that the Feds have in their tool belt is to lower rates, to keep it, that recession from getting too big, and have such a hard landing. But I think it's looming.
Talk more about international stocks. Obviously, rates around the world, inflation around the world is having an impact as well. Are there certain international markets that do look attractive to you?
I do like India. Japan has been surprising. I mean, if you look at all the markets, globally around the world as a whole, I mean, everything is up. And, again, India, that is such an emerging market right now. I think that is really a good place to look. Obviously, there's some opportunities in Japan, but then when you look at China, they're down, and there may be some opportunities in China as well. So again, just doing your homework and making sure that, it's in line with what your risk is, especially those that have a very short runway to retirement within 2 years. You want to make sure that you're very, very cautious.
Interesting. So you mentioned the divide between Main Street and Wall Street and how certainly these past several years, amid a pandemic, intense volatility and choppiness in the stock market, that disparity is widening. Put that in perspective, what exactly that means for our viewers.
Every day, at the end of the month, I think the stats came out says that 49% of Americans at the end of every month need their credit cards to make up the difference between what they're bringing home and what they need to spend just to cover basic needs. And that's really what I'm talking about. The widening gap between the haves and the have-nots. Those that are still generating income, they're really not affected on a day-to-day basis. I mean, they're feeling it, but it's really not affecting their lifestyle. Whereas, Main Street America, it is. They're not able to take those vacations. I mean, they're just having a hard time covering their bills at the end of the month, and that's the disparity that I'm talking about.
All right, so in terms of where we go from here, volatility the first 2 days to start the second quarter, how long do you think this volatility lasts?
I would not be surprised if we see another couple days, going into next week. And again, it's going to create opportunities, for those companies with the strong balance sheets, a lot of cash on hand and strong revenues. But I think the market's going to turn around. Again, it's an election year. Barring some unforeseen geopolitical strife, globally, I think the market is going to rebound between now and the election and wind up positive.
All right, Ed Siddell, thank you for joining. Great to chat, especially as we start this second quarter as the CEO and Chief Investment Officer at EGSI.